What's good, traders? It's March 5th, 2025. Time for another midweek update, being that it's Wednesday. Had a lot of exciting price action coming into today. We're halfway through the week, but that means we still got another half to go. Let's review the pathing we had for both NASDAQ and gold and see what path we have going into Friday. I'm going to try to keep this video light and tight, get right to the point. Let's get right into it. Alright, on this video, we're definitely going to start right here with the economic calendar. I think this is going to be an important market driver, a more important market driver going forward, due to the fact that we've started receiving the tariffs. We'll get into the charts real quick, but just going forward, maybe not this week, maybe not next week, but when we start getting inflation prints, when we start looking at PMI and manufacturing and numbers such as these going forward, like say going into next week, let's see what we have. We have JOLTS, CPI, so the month over month, year over year, all of these numbers, consumer sentiment, going into next month, most definitely. Also the Fed statement and press release, all of these. The economic calendar is about to get increasingly more important as we've received the first set of tariffs for Canada and Mexico and China as well. So the cost of those goods entering into the U.S. will be, and become more substantially greater in the future, meaning that the effect on the consumer as far as the Fed's dual mandate, as far as keeping inflation under control, and also jobs, keeping jobs the employment level at a relatively, at their target. That'll also become increasingly hard as companies who source products, who source components from overseas, as their input costs come up, they may, and also as the demand for their product decrease due to them not having it on the shelves. As they stop making money, they'll have to cut on their labor front and also raise prices on the consumer. So all of that, the market is, it discounts the future, but it tends to not speculate like we speculate as traders. But as far as where we're gonna go, most big money, they're gonna wait and see trends in the data. So looking at the economic calendar going forward, paying attention to news and what impact it'll have on the economy, I think in the future or going forward will increasingly be more important. Going into the end of the week, what do we have? Unemployment claims tomorrow morning. We have some Fed speakers. I think they'll be more important as they react to President Trump's new agenda. Let's see, we have non-farm payrolls. That's going to be very important on Friday. I may not be able to trade that. And we also have actually, the Fed chair himself, Jay Powell, speaking, followed by Trump. So going into the back half of the week, we still have a lot of opportunity for fireworks. Getting right into just the levels chart where we just look at the range that we've had this week. So we have found ourselves firmly inside of the range that we pretty much were looking for going into this weekend. We've taken, so we could take the bull case out, right? I think this was the bull case. I'll leave it there just so for reference for the future. I wasn't in the bull camp, nor was I in the neutral camp. We have accepted into this lower range, and the level that would be the 50% of it, 23.59, has held up as support, just as it has in the past, right? So after finding support at this level, going into the end of the week, I think as far as our path, and we did oscillate in between the 27.63 and the 28.92. But going into the end of the week, if we drop down to a 15-minute, just looking at the path we have, I'm still bearish. I'm still looking for a short, maybe tonight, maybe tomorrow morning, sometime before end of day tomorrow. I don't think it'll take that long either, considering these relatively equal highs on the 15-minute. But basically a draw liquidity somewhere between that 7 What level was that again? 768, 763, and the 892. So on some small time structure in that range of 763, 892, in this general vicinity, if we could get a draw of liquidity inside this range, maybe it's just, you know, a little wick and come right back out. But if I could find that short and on a small time frame, limit my risk right above and hold that for, you know, an opportunity to traverse, break, you know, today's low, and head down here to what I feel like is the extreme of the weekly range, or, you know, what has the opportunity to be on the high time frame chart. Let me scrunch that back up. So getting down here to the 19.9s, 19.8s. This is, you know, where I'm looking for. So basically just following the path we already laid out, where we found ourselves inside the range, test the top for support, for resistance, found support at the 50%, a reoffer where we draw liquidity from that same range, and then traverse to sell off into the week. We'll get into the momentum chart and cover things there as well. I guess we could do that now. So looking at the weekly chart, if we look, well, this is the daily. Let's take a look at the weekly. You can see we did find support at the low of day today on Wednesday at the 20,070 level. That was a decent area for support. It was also a decent long. It did provide decent opportunity. How many times have I said the word decent? Comment, put it in the comments if you know, if you count it, because it is a fairly amount of times. But regardless, we do have an opportunity. If I was just looking at momentum, where does momentum shift? You know, where do we have momentum resistance ahead, above us? I would say like as high as 2140s, all the way up to the 21,300s. I'm not in the camp that would like to revisit those places. Again, if we could find some kind of resistance around 870s up in there. I think it was 863 on the levels chart. On the daily, that's what I would be looking for. Switching down to the 4 hour. As far as the 4 hour, where would momentum shift bullish? Again, that would be 20,800, 20,950. So basically agreeing with the levels chart, I want to stay pretty much below 21K, but more importantly, below the 20,900. And again, looking at the 1 hour, same thing, right? 20,800. I feel like we can visit that level, maybe a little higher, maybe as high as the 9. I think it was the 900. So staying below 20,900 on the hourly chart as well. So just to recap the levels chart, what are we looking for? No higher than 20,900 if you want to stay bearish. The exact level 892. However, we may dance around the top of the range. I just don't want to spend. I would not like to see acceptance above the 892. If we get up there, let's get up there on the wick, maybe 5, 10, 15 minutes. But if we're bearish, we need to get back inside this range. Staying above there and accepting. That leads to getting back into last week's range, which, you know, it could happen. It invalidate my thesis and make it difficult for me to execute going forward, going into Friday's close, right? So that's what I'm looking for on NQ. Pretty much just from where we are now, a little reoffer up here, and, you know, to sell off into the back half of the week, right? Let's take a look at gold. Gold did also provide opportunity this week. So starting on the 4 hour, I think going into the video, I was bullish on gold, extremely bullish on gold. However, I was not comfortable buying gold at the level where it opened. So where was Sunday's open? Right here. I wasn't comfortable with that long. However, it did prove to be the exact thing to do. Putting in if we drop down to a smaller time frame, looks like a decent inverse head and shoulders, right? Where we have a shoulder, a head, and another shoulder, and we've been finding resistance just below That weekly range where I said we get bullish, the 929.39, right? That's the neckline. Should we break that again, things get very bullish very quick, you know, inside this range, right? Even if we were to just say we were going to be neutral in it, this would set up for gold to break out. I am bullish gold. However, for me to participate in this, I would like to see levels as low as, you know, the 2800s, 2827 to, I think the exact level I was looking for was this 2792. A sell-off to there. If we're bearish, we would keep going, but this dash line path is the path that I'm looking for. It has, so we could get rid of the bear case, right? Because this definitely has not happened. The neutral case is still in effect. We can break below what would be the left and the right shoulders and find acceptance in this range and continue to oscillate. You know, but as long as we're finding support above 2908, we're still, you know, we're still looking bullish. I'm not gonna participate in this, but just watching it, seeing how things set up. Where would I get active? I would get active actually on top of this range. So, you know, I'm not a fan of buying tops. However, if, you know, I don't, so in between these two balance ranges, there's a lot of chop. I've gotten cooked, lost accounts trading in this area. So while it is a wide range, while there is volatility and a lot of opportunity, it's just not opportunity, again, that I'm willing to participate in. I think things get, you know, a little bit, even though it's buying all-time highs, as far as limiting risk, if just as mechanical as this range has been a resistance where we come and touch it and reject, if we were to get above it, I feel like just how you could limit your risk on the short to the downside at the bottom, you will get that same opportunity as far as going long at the top, right? So getting inside of and above 2939, keeping structure bullish and breaking out of the top. I'm not a fan of buying tops, but I think I you know, it'd be hard not to long gold up there, even if it's just for scalps in the you know, in the general bullish direction. We also have fundamental reasons why gold could go long, considering again the tariff scares and the fact that they are inflationary and gold is the grandfather's hedge to inflation. There's a huge case of why gold could continue higher, right? Let's look at the momentum on gold. Again, let's see a GC. Let's see what we have here. Let's start on the weekly. Look at the weekly candle as it is right now. Again, like I was saying on the weekend video, gold is extremely bullish. The only thing I didn't like was this excess wick on the monthly candle on last week's monthly candle. Again, getting above that high, which would be the top of that weekly balance range, it could get bullish quick. Also going into the week, we could sell back to the monthly open and continue lower. So there's a lot of things that could happen. We haven't took out the top of that wick yet, but this weekly candle, if it closed right now, would be an inside candle. Not much that I could read into that. You know, it could be a reversal candle, it could be a continuation candle. It really depends on how we take out the range of this red candle. Taking it off lower, all of this green body we have now will be a wick. It will show buyer exhaustion and seller strength, and you know, we could come as low as the 2746s. Taking out the high, this would turn this last week's red candle into a higher low, right? Where we had, you know, if we just go to the swing count from the lowest low down here, we have low, higher set of lows, even though they're equal lows. That's probably a target in the future if we were to sell off. But we have higher lows, and this would be, you know, even though it's one weekly candle, if we take out the top of that red weekly candle, that would be a higher low. Let's switch down to the daily, see what insight we could get from there. Again, I'm not so bullish on the daily. I still, you know, like the daily still has a little gas in the tank, right? It still can continue higher. But I am seeing that bullish momentum is starting to wane. If gold is going to take off it needs to happen, you know, before the end of this week. Thursday or Friday candle needs to, you know, be strong and bullish, or else on this daily chart I may start considering shorts as we start getting momentum crossovers. Like the same crossover that got me bullish down here would get me bearish up here. Not necessarily bearish, because again, well, yeah, because then, you know, you start thinking about that monthly exhaustion wick. You start thinking about how we're in an inside weekly and could take out the bottom, and then you add onto that the daily. So next week I may be bearish on gold. I may, you know, we may have a short-term top. It depends on how things play out. I'm not gonna, you know, speculate and start trading on those ideas, but it's something to watch. It's definitely something to watch. That gold may be at a spot where at this same weekly, you know, this resistance right here, if it were to hold and we start getting back into this purple range, if we break below, I may take the short below 29.08 for the 2800s, right? I can build the case. I'm starting to feel able, you know, inclined. Should we maybe going into Globex? I'm not, you know, I'm not really willing to run in front of a freight train, but I could make the case that, you know, if gold starts building structure below 2900 again, that things can get bullish. But if we start breaking into last week's that higher weekly range from the levels chart, if we start holding, so basically it's a binary trade. Gold is either above 29.39 and I'm bullish, or it's below 2900 and I'm bearish, right? This 40-point range or so, how we break inside, or, you know, how we break out of this 40-point range is what will determine my stance on gold, right? If I were to just draw that range and make it red or something, this range here, how we break outside of this, I know I have a lot of ranges on the screen now, but this red range, I care about this red box. If we're above it, I'm bullish. If we're below it, I'm bearish. All right, I think that's it. I probably held you what is looking at like 17 minutes, a little bit longer. I probably won't put a levels chart. If you made it this far, you're familiar with it, just pause the videos. I'm gonna chill out. We'll talk about levels a little bit more in detail getting into Saturday. If you got to take anything away from this video in particular, yeah, there's levels, yeah, there's price action. Be mindful of economic data. I think it's going to increasingly become more important as the effects of the tariffs filter into the economy. I know a lot of it is not even priced in that it would have ever happened. You know, a lot of big fund managers were not taking Trump serious as far, you know, he say a lot of things. You know how the current head of state could be when it comes to just being wordy and things of that nature. You know, he's always been Mr. Economy. So putting tariffs on the world pretty much, you know, would be counterintuitive to somebody who only cares about a green stock market. However, he has went forward with them, and he's showing no signs of backing down. He has, you know, pulled back some of the funding and the resource allocations for the Ukrainian war. So there are a lot of irons in the fire that could take down these markets. Keep your head on the swivel. Trade well, trade smart. If you saw anything in this video you like, please hit that like button. Please hit that subscribe button. I've been stagnant at 51 subs. I do appreciate the ones I have, but I'm trying to grow this channel. So if you're watching this video and you're not subbed, go ahead and hit that sub button. If there was anything you disliked about this video, please, by all means, leave a comment. If there was anything you did like, shout out Bree Trades. She comments on my videos. She's right. I do deserve to just take the rest of the week off and not blow up my accounts like I normally do. I'm probably going to take that to heart. I made $250 today, not going for my big home runs today in the XFA. I may just try to find a little $200 scalp today, maybe the same tomorrow, and just come in, rested and with a new set of eyes for next week. That's what I plan, but you know, who knows what may happen in between now and then. But regardless, feel free to leave comments. I appreciate them. I try to respond to them all. Shout out to Two Real Trades. Shout out to Mr. Take the Gap, JR. Shout out to everybody in my Two Real University family, all my trader friends. If you're watching this, hit that like button for your boy. Hit that, you know, comment down below what you did like or didn't like. And especially going out to Two Real, man, get on your shit, man. Start making content with your boy, man. You know, I ain't seen too much from you lately. I know you in your head and all this, but you know, come back. The world waiting. Anyway, trade well, trade smart, trade on. Darnell Price out.